Good morning and welcome to another episode of Crypto Daily, your source for the latest news and updates from the world of cryptocurrency and beyond. Today, we're starting off with a rather disturbing story that's been making headlines in Australia.
That's right. It seems a high school student in Sydney has gotten themselves into some serious trouble after allegedly using artificial intelligence to create deepfake pornographic images of their female classmates.
This is a pretty shocking incident, and it highlights some of the darker aspects of AI technology. According to reports, the student is now facing a police investigation and disciplinary action, marking one of Australia's first major AI incidents in an educational setting.
Yeah, this is definitely a wake-up call for schools and law enforcement alike. It's a reminder that AI can be used for malicious purposes just as easily as it can be used for good. And it raises some serious questions about how we're going to regulate this kind of technology moving forward.
Absolutely. I mean, deepfakes are highly realistic images that are generated using deep learning algorithms, and they can be incredibly difficult to differentiate from real images. This technology has been around for a while now, but it's only recently started to get mainstream attention.
That's right. And as AI technology continues to advance, we can expect to see more and more sophisticated deepfakes being created, which is why it's so important that we start having serious conversations about how to regulate this technology and prevent it from being used for nefarious purposes.
Well, this incident in Sydney is definitely a catalyst for that conversation. And it's not just about the technology itself, but also about the societal implications of AI-generated content. I mean, think about it. If someone can create fake images or videos that are almost indistinguishable from real ones, what does that mean for our understanding of truth and reality?
Exactly. It's a slippery slope and one that we need to be careful about navigating. We'll be exploring this topic further throughout the episode, including some of the potential implications for the crypto space.
That's right, because while this incident may not seem directly related to cryptocurrency at first glance, it actually raises some important questions about the role of AI in the digital economy. And we'll be diving into some of those questions later on in the show.
But for now, let's move on to some of the other major stories making headlines in the crypto space. We've got updates on the latest market trends, as well as some news about a major new partnership between two of the biggest players in the industry.
Picking up where we left off in our discussion about the potential for cryptocurrency ETFs to shake up the market, we've got some new developments in the XRP space. Ripple president Monica Long has expressed her optimism about the impending arrival of XRP ETFs, and it seems the market is taking notice.
That's right. XRP has outperformed other major crypto assets over the last 24 hours with a 4% gain compared to less than 1% for Bitcoin and Ethereum. And it's not just Long's comments that are driving this momentum. Ripple CEO Brad Garlinghouse's meeting with former President Donald Trump has also generated some buzz.
Now, we don't have any details on what was discussed during that meeting, but it's certainly an interesting development. Garlinghouse has been a vocal advocate for clearer regulations in the crypto space, so it's possible that was on the agenda.
Building on what we discussed earlier about the potential for ETFs to bring more institutional investment into the crypto market, it's clear that Ripple is positioning itself for a potential influx of new capital. And with XRP's price movement over the last day, it seems like the market is starting to take notice.
Speaking of institutional investment, it's worth noting that XRP has been one of the more popular assets among institutional investors in the past. If we do see an XRP ETF come to market, it could be a major catalyst for growth.
Of course, there are still plenty of regulatory hurdles to clear before any XRP ETF can become a reality. But with Long's optimism and Garlinghouse's meeting with Trump, it seems like Ripple is feeling confident about its chances.
And that confidence is translating to price movement, at least for now. As always, we'll be keeping a close eye on this story to see how it develops. In the meantime, it's worth keeping an eye on XRP's price action to see if this momentum can be sustained.
Absolutely, and we'll also be watching to see if other assets start to follow XRP's lead. If we do see a wave of new ETFs come to market, it could have a major impact on the broader crypto landscape.
So we were discussing earlier how Elon Musk's plans for Dogecoin are still uncertain, but now it looks like he's going back on another major promise related to Doge, not the cryptocurrency this time, but rather the Department of Government Efficiency.
That's right, and it's interesting to see how Musk is revising his approach. Initially, he proposed slashing $2 trillion in U.S. government spending as the co-head of Doge. However, it seems that goal was met with skepticism from experts on Capitol Hill.
Exactly. And Musk's backtrack comes just after that ambitious target raised eyebrows among lawmakers. In a recent interview with Mark Penn, Musk explained that his initial goal was more of an aspirational target rather than a realistic one.
Aspirational is one way to put it. It seems like Musk was trying to make a bold statement, but didn't quite think it through. Now, he's saying that the actual goal is to identify areas of inefficiency in government spending and make incremental changes.
That's a much more measured approach, and it's probably more in line with what's actually achievable. But it's also a bit of a disappointment for those who are hoping for more drastic changes. I mean, $2 trillion is a huge number, and slashing that amount of spending would have had significant implications for the economy.
Absolutely, and it's also worth noting that Musk's involvement in the Department of Government Efficiency is still a bit of a mystery. We don't really know what his role entails or how much influence he'll have in shaping policy. So, while this backtrack might be a more realistic approach, it's also a reminder that we shouldn't get too carried away with Musk's promises.
Speaking of which, it's also worth revisiting the discussion we had earlier about the potential for cryptocurrency to be used in government transactions. If Musk is serious about increasing efficiency in government spending, could we see a role for cryptocurrencies like Dogecoin in the future?
That's an interesting idea, and it's definitely something to keep an eye on. While it's unlikely that we'll see widespread adoption of cryptocurrency in government transactions anytime soon, it's possible that we could see some pilot programs or experiments in the future.
And if that happens, it could be a major boost for cryptocurrencies like Dogecoin. We'll have to keep an eye on this story and see how it develops. In the meantime, let's move on to our next story.
Building on what we discussed earlier about regulatory bodies taking a closer look at the crypto space, there's more news that's come to light. It seems Coinbase has received a subpoena from the Commodity Futures Trading Commission, or CFTC, in relation to Polymarket.
That's right. According to a source familiar with the matter, the CFTC is seeking general customer information related to Polymarket. Now, for our listeners who might not be familiar, Polymarket is a platform that allows users to bet on the outcome of various events, and it's been gaining a fair amount of attention, especially during the U.S. elections last November.
Yes, and it's worth noting that this isn't the first time Polymarket has been in the spotlight. We've discussed the platform's rise in popularity before, and how it's been touted as a prime example of the decentralized finance, or DeFi space. But it seems that with great success comes great regulatory scrutiny.
Exactly. And what's interesting here is that the CFTC is specifically targeting Coinbase, which is one of the largest and most well-established crypto exchanges in the US. It's clear that the regulator is trying to get a better understanding of Polymarket's operations and how it's interacting with customers through Coinbase.
Now, we've obtained a screenshot of an email sent by Coinbase to certain users, which appears to confirm the subpoena. The email states that Coinbase is required to provide the CFTC with certain information related to Polymarket, but it doesn't go into specifics about what that information might be.
This raises some interesting questions about the relationship between crypto exchanges, decentralized platforms, and regulatory bodies. If the CFTC is able to obtain customer data from Coinbase, what implications might that have for Polymarket and its users? And what does this mean for the broader DeFi space, which has been built on the principles of decentralization and anonymity?
Those are all great questions, and it's clear that this is a developing story that we'll be keeping a close eye on. As we've discussed before, the regulatory landscape for crypto is constantly evolving, and it's crucial for investors and users to stay informed about the latest developments.
Absolutely. And speaking of regulatory developments, there's been some interesting news out of Europe regarding the EU's proposed crypto regulations. We'll be diving into that story next and exploring what it might mean for the global crypto market.
So, we've been tracking Dogecoin's wild ride, and it looks like the roller coaster is finally coming to a halt, at least for now. After surging to nearly 40 cents just last week, Doge has lost all of its 2025 gains and is now back at square one.
That's right. It's been a brutal couple of days for the top dog coin, and it's not like Doge is alone in this slump. We've been talking about the broader market downturn all episode, with Bitcoin and Solana taking significant hits as well.
Exactly, and we discussed earlier how this downturn is likely linked to the overall economic uncertainty we're seeing. But it's interesting to note that Dogecoin's price movements tend to be more volatile than some of the other major cryptocurrencies.
That's true. As a meme coin, Doge has a reputation for being highly speculative and reactive to social media trends and celebrity endorsements. Remember when Elon Musk tweeted about Doge and the price skyrocketed?
Yeah, that was a wild time. But now it seems like the hype has worn off and investors are taking a more cautious approach, which, to be honest, might be a good thing in the long run.
Absolutely. I think we're seeing a bit of a reality check in the market right now. After the excitement of the new year, people are taking a step back and reassessing their investments, and that's healthy.
So what are the key takeaways from today's stories? Well, for one, the crypto market is still highly unpredictable. We've seen major swings in just a matter of days, and it's clear that investors are still trying to find their footing.
And two, it's essential to keep a level head in times like these. It's easy to get caught up in the hype and FOMO, but at the end of the day, it's crucial to have a solid understanding of the underlying fundamentals and market trends.
That's right. And finally, despite the short-term volatility, we're still seeing a lot of innovation and growth in the crypto space. From DeFi to NFTs, there are plenty of exciting developments that could shape the future of the industry.
So what's the market outlook going forward? It's tough to say, but I think we can expect more of the same volatility in the short term. However, as the market continues to mature and more institutional investors get involved, I'm optimistic that we'll see more stability and growth.
Well, that's all for today's episode. Thanks for tuning in, and we'll catch you all on the next one.
And don't forget to follow us on social media for the latest updates and analysis. Until next time, stay crypto savvy.